Welcome to our in-depth analysis of Florida's housing market. In just moments, we will explore the top 10 cities predicted to face a significant market crash in 2025. Imagine your dream Florida home turning into a financial nightmare. Our discussion today is analytical, fact-based, and designed to help investors and homebuyers navigate uncertain economic waters. We dive deep into each city's housing dynamics, unpacking economic trends, statistical insights, and expert commentaries. Florida's real estate market has long symbolized sun-soaked luxury and booming growth. Yet beneath this radiant surface, economic strains and market overextensions are emerging with alarming clarity. We begin our journey in Cape Coral, a city once known for its rapid price surges, now facing a concerning decline. Recent data indicates that while the median home price once soared near $405,000 during the pandemic, today a steep 6.2% annual price decline now darkens the horizon. Overbuilding and elevated insurance costs after Hurricane Ian in 2022 have placed immense pressure on the market. Experts warn that these factors together create a precarious situation for prospective buyers and existing homeowners alike. The signals are clear, and caution is warranted. Turning our attention to Fort Myers, we discover a city battling with challenges of overvaluation. In this dynamic metro region that includes Cape Coral, home sales have plummeted by over 30% year over year. With a 4.8% fall in average home prices in the first quarter of 2025, the market is showing clear signs of strain. Many investors have described Fort Myers as highly overvalued relative to local income levels, raising major concerns about sustainability. It is a stark reminder that behind the charm of Florida's coastline lies an unsettling economic reality. Naples Marco Island is next on our list, a region synonymous with luxury and exclusivity. Here, the market slowdown is palpable. High interest rates, rising insurance fees, and increased HOA costs are gradually cooling the previously sizzling housing market. The median home price hovering near $750,000 now experiences an annual price decline of roughly 4.7%. The luxury market, once a safe haven for premium investments, is showing signs of strain amid tightening economic realities. The cautionary atmosphere now casts its long shadow over this illustrious region. In the Space Coast, comprising Palm Bay, Melbourne, and Titusville, rapid price growth once outpaced local incomes with near unstoppable momentum. Today, however, statistical trends indicate a slowdown that cannot be ignored. The median home price in this region is approximately $360,000, accompanied by an annual decrease of about 5.1%. Although optimism once fueled bold investments in the promise of the space growth, the current figures tell another story, a story of overextension and the calming of a once feverish market. Next, we visit the bustling metro area of Tampa, St. Petersburg, Clearwater, a region that experienced rapid appreciation in recent years. Known for its fast-paced growth, the market here once dazzled with opportunities. Now, however, signs point toward a significant slowdown as concerns over affordability raise red flags among analysts. The median home price, currently around $420,000, reflects an annual decline of nearly 3.9%. Despite a legacy of rapid appreciation, the industry now faces pressures related to consumer confidence and liquidity. This transformation, from vibrant expansion to measured contraction, illustrates the inherent cyclical nature of real estate. The trend encourages a reevaluation of investment horizons. Emerging from the Gulf Coast, we turn our focus to Orlando, Kissimmee, Sanford, a region whose real estate pulse is tightly linked to the tourism industry. These cities have thrived on bustling visitor numbers and the strong performance of vacation rental investments. However, with fluctuating tourist flows and rising operating costs in the short-term rental market, the foundations of demand are starting to crumble. With a median home price around $390,000 and an annual decline of 4.2%, market experts caution that the uncertainties stemming from tourism volatility could recast the region's economic future. The dual dependency on both tourism and investor confidence intensifies the forecast of potential risk. It is a scenario urging careful review for anyone involved in this market. Our next city on the docket is Lakeland, conveniently nestled between Tampa and Orlando. The slowdown in price increases is now an unmistakable signal of market instability, alerting everyone from local homeowners to potential investors. At times, economic changes are gradual. At other moments, they present abrupt shifts in market sentiment. Lakeland's story embodies the latter, underlining how deeply interconnected regional markets can become in times of economic stress. Northport, including areas such as Port Charlotte and Venice, has witnessed tremendous demand and soaring prices in recent years. At its peak in early 2023, average prices climbed to near $480,000. Amid this boom, however, by April 2025, the market trend has reversed and prices have fallen to around $420,000. The significant drop illustrates a rapid cooling off after a period of intense growth, highlighting a market correction that experts suggest was long overdue. This contrast between exuberant peaks and sudden declines creates an environment filled with uncertainty and caution. Investors must remain vigilant as economic indicators continue to reveal volatile shifts. St. Petersburg, located along Florida's Gulf Coast, has also faced its own unique market journey. Once enjoying a consistently upward trend that reached close to $450,000, the current market reality now shows prices settling near the low $400,000 range. Although this city's past performance reflected robust growth and investor optimism, rising costs and economic pressures have tempered that momentum. The gradual transition from high growth to stabilization is a reminder of the cyclical nature of real estate. While the change brings a sense of predictability, experts warn that the underlying challenges persist. Our final city, West Palm Beach, has experienced both dramatic peaks and equally sharp declines. Once buoyed by rapid recoveries that pushed prices to nearly $480,000, the market has since seen a significant decline. By April 2025, numbers indicate that prices have regressed to about $420,000. This volatile journey, from surge to downturn, epitomizes the inherent risks that any booming market can face. The state of the market narrative here is underscored by a relentless dynamic of optimism followed by sobering reality checks. Every statistic reinforces the importance of thorough due diligence and measured optimism when navigating Florida's real estate scene. As we reflect on these 10 cities, a cohesive picture emerges of Florida's vulnerable housing market. Each analysis, from Cape Coral's dramatic price drop to West Palm Beach's volatile fluctuations, underscores an impending downturn. The data points and expert commentaries weave together a narrative of caution, urging investors, home buyers, and economic analysts to re-examine their positions. This story is not merely a sequence of numbers, but a broader lesson in economic resilience and adaptability. The overarching message is clear. While Florida's charm and growth have drawn international attention, the volatile nature of its housing market now demands a sober reconsideration of risk and reward. Throughout 2025, market conditions have evolved rapidly. Economic shifts driven by overbuilding, insurance burdens, tourism dependency, and regional overvaluation have coalesced into a perfect storm of financial uncertainty. Visual data on screen reinforces each expert's assessment, illustrating comparisons between stunning peaks and vulnerable troughs. Each city tells a vivid story of relentless growth, followed by an inevitable cooling of desired prices under mounting pressure. This layered analysis invites us to question long-held assumptions about Florida's perpetual market buoyancy. Economic experts warn that investors who remain blind to these statistical harbingers may face unexpected financial challenges. It is no longer the isolated incidents of overvaluation that signal risk, but a systemic trend sprawling across major Florida cities. Such trends expose the vulnerabilities inherent in a market once defined by its unchecked optimism. The insights we have provided aim to empower you with the knowledge to safeguard your investments in these uncertain times. Capital preservation is paramount, and careful market analysis remains crucial to ensuring long-term financial security. Each city we examined contributes essential data points within an overarching tableau of Florida's unpredictable economic landscape. Whether it is the aftermath of hurricane-induced rebuilding, the cooling enthusiasm for luxury real estate, or the challenges posed by an over-reliance on seasonal tourism, every city engages with a similar narrative. Unprecedented growth has met its match in market reality. The numbers are stark, the trends are persistent, and the time frame has arrived. Someone once said, "Every market correction begins with a whisper before turning into a roar." That whisper is growing into a roar now. Our journey through these top 10 Florida cities reveals not only economic vulnerabilities, but also important lessons for future planning. Reassessing investments in light of ever-changing market conditions has never been more critical. To conclude, the Florida housing market presents both alluring potential and daunting risks. Our sequential breakdown, from the cautionary decline in Cape Coral and Fort Myers to the striking corrections seen in Northport and West Palm Beach, underscores a central lesson: remain informed and vigilant. These insights empower you to navigate a market in flux, preparing you for future shifts and new opportunities. Remember, the markets are ever-changing, and every cycle brings both challenge and promise. In these uncertain times, wisdom lies in proactive planning and continuous research. The housing market of Florida is a vivid reminder of how quickly fortunes can change in the face of economic pressures. As statisticians, investors, and homebuyers sift through complex data, clear insights become the best asset. The detailed analysis provided today is both a warning and a guide. It is a call for prudence, urging you to safeguard your future. The lessons are clear: adapt, evaluate, and act with both confidence and caution. Stay informed, protect your investments. Subscribe now for the latest insights into Florida's housing market trends.